GrubHub shares. Take a look. Investors getting their fill today. Stock is up 27%, hitting an all-time high. That's after the company announced an earnings beat and also a new partnership with Yum Brands. The deal makes GrubHub the exclusive online pickup and delivery partner of KFC and Taco Bell. Yum Brands has also taken a 3% stake in the company, buying $200 million in GrubHub stock as part of the agreement, and Yum Brands is also getting a seat on GrubHub's board. What does all this mean for the future of the company? Joining us in a Power Lunch exclusive is the CEO of GrubHub, Matt Maloney. Hi, Matt.
Hey.
Tell us how this deal came about.
Well, you know what? Yum's been looking for a partner to help them deliver their food for a long time, frankly. They've been dabbling with different platforms. They recognize the amount of growth that's available in online delivery. And so we started working with them. They saw clearly the advantages we brought in terms of our scale, our expertise in technology, and the geographic areas that we cover. We made a lot of commitments to them in terms of growing our delivery capabilities. They saw us as the leader. They put their chips behind us. Not only do we have now a deep partnership, but as you noted, a significant investment and board integration. So this is a really big deal, not only for us and Yum, but also for the entire market.
Does this deal preclude you from doing other major franchises and brands out there? I mean, you could almost be seen as earlier as agnostic, and now you're in with this big publicly traded partnership. So does that mean you're never going to do a deal with McDonald's? You'll never be able to do a deal with Burger King?
Absolutely not. In fact, we're talking to many players. We recently announced a partnership with White Castle, with Jack in the Box. We continue. The whole restaurant segment is looking towards online delivery as significant growth opportunity. In fact, Yum wants us to continue to grow. That's part of the reason why they put such a significant investment behind our company.
So tell me, because I don't know, and I apologize for not knowing this, how many employees do you have today? Are they staff employees or private contractors? And how many more employees do you think you will need to bring on to handle what clearly is going to be greater business?
Well, we have thousands of employees, but in terms of delivery drivers, those are independent.
How many thousands?
Those are the delivery drivers are independent contractors, and we have over 20,000 monthly active delivery drivers.
Okay.
Now we're delivering in 80 markets right now, which is about 900 cities across the U.S. We've committed as part of this deal to deliver in 100 more markets. So we're more than doubling our geographic coverage for delivery in order to help support Yum Brands. And that still will only cover about 2/3 to 3/4 of the KFC and Taco Bell locations.
So that's interesting. You've got 20,000 contractor deliverers right now. You're going to double your coverage. You can do the math and you can say maybe it's not going to exactly double those 20,000. But this is a job creation story too, isn't it, Matt?
Absolutely. Absolutely. And not only are we increasing our markets by more than double, we are going deeper and adding more drivers in all of the 80 markets we're serving currently because, of course, there's Taco Bells and KFCs in San Francisco and Los Angeles and Boston and D.C. and Manhattan and Chicago and everywhere in between.
Matt, you've got an incredible multiple, 132 on trailing earnings, and numbers like you're putting up today in your earnings reports, not surprising that the market's going to give you a big fat multiple because you are growing so fast. However, interest rates are rising. And I'm looking at you, and I'm guessing you've never lived through a rising interest rate environment. And are you ready for what happens when the market starts to demand more? I mean, your growth is going to have to stay strong in order to maintain the share price that you've got going.
Absolutely. But you look at our performance last year, 50% revenue growth, 100% profitability growth, and then you look forward. So we processed $4 billion in restaurant food sales in 2017, and it's over a $200 billion marketplace domestically. So we're barely scratching the surface. So when you look at partnerships such as the Yelp partnership that we announced last earnings, which will introduce us to hundreds of thousands of diners, and then you bring the Yum partnership that we're talking about right now, which brings thousands of supply-side restaurants all across the country in markets where we have very low awareness, and it mixes together to what I think creates an incredible growth story.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.